Hey everyone, and thanks for jumping back into the precious metalverse. Today we're going to talk about gold, so if you guys like the content, please go ahead and subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below, and check out the premium list at intothecryptoverse.com. So we've been following gold for a few months now on the channel, and we identified this pattern here, right, an undervaluation followed by kind of like a little bunny hill in a sense, like a slight overvaluation by about 2x, back to the fair valuation logarithmic regression trend line, then a speculative bubble, and then back down, undervaluation, back to our little bunny hill, 2x over the fair value regression line, and then maybe beginning our next speculative bubble phase over the next like 5 or 6 years, which hopefully will take gold up to $5,000 or $6,000. Now again, we add on this basically this uncertainty band in terms of looking at our fair valuation and just trying to identify where we are over the macro scale. Now, one of the things we've looked at, right, are these trend lines, these macro level trend lines. You can see, of course, that we've moved back into this window here from, if you just draw, like, say, from peak to peak, of course. So we're back into this window that has spanned us a long time, that historically we've been very overvalued in. If we draw a few more trend lines, you can see this one was to the downside, this one's to the upside, basically just drawing it between this support here before we fell into our final capitulation, and then the support in this region, and then finally this last trend line that takes us all the way back to the very beginning, traversing this point here right before we fell, and then our next peak. So if we're lucky, this is sort of what I'm speculating over the next several years, in terms of the idea that maybe the dollar's being devalued given all the printing being that's going on. Now the main thing that I really want to talk about, of course, is the overvaluation versus the undervaluation. And right now I still feel like we have a long way to go. I feel like gold has a bright future ahead of it, at least for the first half of this decade. You can see our general undervaluation. So if it's color coded by red, it means it's undervaluation. You might say, well, why is it positive? I'm plotting it on a logarithmic scale, so we're just showing positive values. So to identify whether it's overvalued versus undervalued, I'm just color coding it. So red is undervalued, green is overvalued. Okay, again, undervalued. And then the idea, right, is this was our first little bunny hill, right, and then our bubble. So we had our bunny hill. Hopefully we're going into our next major bubble over the next few years. If you look back at the regression line, just as a reminder, the undervaluation phase, remember it might look different to you, but this is a logarithmic scale. So the primary y-axis is a logarithmic scale. This is $10, $100, $1,000, and $10,000. So if you just plot, the valuation, the percentage of the closing price against the fair value regression line, anything below 100 means it's undervalued, of course. Anything above 100 means it's overvalued. So you can see we reached approximately a 400 to 450% overvaluation at the peak of the bubble in the 1980s. And our undervaluation in the 1970s was about negative 50%. And then in the 2000s, it was about negative 50%. Okay, so I'm looking at, this was our first trend here. And then we're basically just in the last stage, right? So looking to see something like this happen over the next several years. Now you can kind of line up these, right, and see that this was our our undervaluation region down here, our overvaluation region that identified the first kind of move of that cycle. If we overlay the regression band, just so you guys can relay it here, this is undervaluation right here, so that corresponds to that. This is the overvaluation corresponding to that move, right? And then again, this is the undervaluation corresponding here, and then this is that first overvaluation corresponding to that little bunny hill. So what we're looking for now, right, is a move that will mimic something like this. Now, I don't think that it would be quite as big. You can see that this one came up to maybe almost 200%, not quite, maybe 180% overvalued, while the one earlier in the 2010s came all the way, was maybe 10 percentage points lower. We might expect the next one, if we do go into the speculative bubble mode over the next, say, 5 or 6 years with gold, then maybe it would only be overvalued by maybe 300% or so. Now, if you look at what that might mean, if we go back to this valuation here, in 2025, the fair value of gold will be approaching $2,000. By 2026, 2027, somewhere in that time frame, the fair value, according to our logarithmic regression fit, will be approaching $2,000. Therefore, if it's overvalued, by 100%, we're looking at a $4,000 gold. If it's overvalued by 200%, a $6,000 gold. And if it's overvalued by 300%, an $8,000. So this is just, it's just what the math suggests. Let me know what you guys think. I think it's an exciting time, of course, for precious metals. If you, generally speaking, if you look at their Sharpe ratio, they don't really tend to be that high. I think the Sharpe ratio is fairly lower than 1, maybe around 0.5, 0.6 or something, depending on what the weightings of the various precious metals in your portfolio are, whether it's gold, silver, platinum, copper, palladium, whatever it might be. The Sharpe ratio is not very high. But the argument, right, is there's a time for precious metals, right, as a good hedge when the economy just seems like it's really irrational, and also identifying these macro level trends and saying, what, yeah, historically speaking, this was a 10-year window where it basically just went back down. It went down and then back up to its same price over 10 years. But the thing is, right, is you want to get on board during these moves, right? During these moves here. And I'm hoping, right, it's not financial advice, but I'm hoping that this is the beginning phase of another substantial move to take us for the next, say, 5 or 6 years. So let me know what you guys think. If you guys like the content, remember to subscribe if you want to see more stuff on precious metals like gold, silver, some other precious metals. Let me know in the comment section below what you would like to see. We do have the premium list at intothecryptoverse.com, so if you want access to exclusive content, if we get more people in there that are really wanting stuff on gold and silver, then I'll make sure to cater to that desire and show more on that. Of course, it primarily caters to cryptocurrency at the current time, because I actually believe the ROI in crypto is higher than precious metals. But again, it's a good thing to have a diversified portfolio, and I can say that I do own gold. So let me know what you guys think. Please subscribe to the channel at the very least if you guys like the content, you like more of a quantitative approach rather than just drawing a few lines on TradingView, but looking at regression lines, looking at overvaluation versus undervaluation. Make sure you give the video a thumbs up. Make sure you check out the Telegram channel and the premium list at intothecryptoverse.com, and I'll see you guys next time.